Hello, good morning everyone. Myself Navjot Sharma. My student ID is EMV24227. Today I am going to discuss about my topic accounting for income tax, which is one of the complex topic in accounting. So there is a need to understand the impact of tax in financial statement as well as basic terms and method of computing the taxes. So in my assignment, I have also used the real life case by taking ASX Limited Company's financial statements. So first of all, I am going to continue with my introduction part of my assignment. The company which I selected for analysis is JB Hi-Fi Limited, which is listed on ASX exchange. For that company, I have used the most recent financial statement, that is financial statement for the year ended on 30th of June 2019. So in general, there are different key concepts of accounting related to income taxes like accounting profit, second one is taxable profit, third one is temporary difference, which is further divided into taxable temporary difference and deductible temporary difference, and the fourth one is deferred tax assets, and the another one is deferred tax liabilities. So I am going to discuss about the key concepts of various terms in detail. First of all, accounting profit is the profit or loss reported by the entity as per the financial statement before adjusting for the allowances and disallowances as per the governing income tax rules. So the third one is the temporary difference, which is the difference between the carrying book value of various assets and liabilities carried in the books as compared to the tax base of such assets and liabilities. So temporary difference is further divided into taxable temporary difference and deductible temporary differences, where taxable temporary difference results in taxable income for the future period, where such income is not part of the accounting profit for that period, whereas deductible temporary differences results in the deduction in future period against taxable income for future period when assets and liabilities are recovered, whereas deferred tax assets are recoverable in form of lower tax payable in future period arising out of unused tax credits carried forward and adjustments of forward losses. On the other hand, deferred tax liability is the liability for the income tax payable in the future period when taxable primary differences will be settled or recovered. Now, I am going to discuss about the recognition criteria of deferred tax assets and deferred tax liabilities, where deferred tax assets are recognized as an assets on all the deductible temporary difference and to the extent it is probable that entity will have sufficient taxable income against which such deductible temporary differences can be adjusted. So, deferred tax asset is opposite of deferred tax liability, which can increase the amount of income tax owed by a company. Deferred tax assets are created due to taxes paid but are not yet organized on the income statement. This asset helps in reducing company's tax liability, whereas deferred tax liability is a tax which is due for the current period but has not yet been paid. So deferred tax liability records the fact the company will pay income tax because of a transaction that took place during the current period, such as an installment. Now I am going to discuss about the tax expense. As per the company's financial statements of JB Hi-Fi Limited Company, so the tax expense of JB Hi-Fi Limited Company comprise of current tax and deferred tax, where current tax represents the portion of tax determined by the company based on computation of taxable income at the company tax rate applicable for that particular year. On the other hand, the JB Hi-Fi Limited Company has a deferred tax credit of $8.4 million for financial year 2019 and $10.4 million for financial year 2018, which represents that the company has a deductible temporary difference greater than the temporary difference of taxable, hence resulting to increase in deferred tax position of the company. So based on reconciliation of tax expenses, the current tax payable by the company for current year is not same as determined if the company applies the applicable tax rate on the accounting profits. So based on the reasons for differences in the current tax as per tax laws and tax calculated on accounting profit by applying the company's tax rate. So there are some reasons of accounting of deferred tax assets and liabilities. So under deferred tax assets, provision is a deductible temporary difference arising out of provision or employee benefits, lease provision, etc. And inventories is a deductible temporary difference arising out of provision on inventories. So as well as deferred revenues is a deductible temporary differences on revenue received in advance. Under deferred tax liabilities, the reason for accounting under brand name is taxable temporary difference due to difference in book base and tax base of intangible assets and brand name. The next topic is tax assets or payable and tax expenses versus tax paid, where current tax assets represents tax paid by the entity to the revenue authorities in excess of the income tax payable as per income tax rules as on balance sheet date, whereas current tax payable represents the shortfall in the taxes paid by the entity as on balance sheet date towards the current tax expenses for the year based on the taxable profit of the entity. So, the JB Hi-Fi Limited company has current tax liabilities of $5.1 million as at 30 June 2019 and $9.6 million as at 30 June 2018. So, according to tax expense versus tax paid, the income tax expense as per the income statement is $109.5 million and the income tax paid as per cash flow statement is $116.4 million. So there are some reasons for difference of income tax expense versus taxes paid. First of all, the tax expense include the deferred tax expense or credit. Secondly, tax expenses does not represent liability for the period, rather expenses charged which arises out of income tax rules, whereas tax paid represents the taxes paid by the company during the financial year. So it does not account whether the taxes paid are pertaining to current year or previous year. So my another topic is concepts of temporary and permanent differences. So temporary differences is the differences between the carrying book value of various assets and liabilities as compared to the tax base of such assets and liabilities per tax rules. And second one is the permanent difference. In earlier standard AASB 1020 prior to AASB 112, there were the concepts of timing difference and permanent difference. So finally, under conclusion part, I am going to discuss some of the key insights of my assignment. Firstly, a deep understanding of the key concepts used in the accounting of taxes on income, such as accounting profits, temporary differences, and types of temporary differences. Secondly, I gained deep understanding on income tax disclosure in the financial statement, such as income tax statement and balance sheet statement. Thirdly, I understand all old concepts of permanent differences and I gain a deep understanding of difference in value of tax paid per cash flow versus tax payable as per balance sheet and tax expense as per income statement. Thank you so much.